Yeah, thanks. A very quick overview about the Academy, and then the bulk of today is simply the panel discussion, and then we're going to finish today with some closing remarks, also looking ahead, what some things that we're working on with the Academy, and we do our famous group photo. So on the next slide, for those of you who are slightly familiar with the Academy, a few facts about the Academy. So we've been around since, I'm gonna say, 2021. Is that correct, Alex? 2020, 2021.
No. We started,
2019? Oh
we're
my God.
COVID babies.
Right.
2020, first COVID
2020.
was
2020. So we've
in
been,
COVID.
my apologies. I should have known. So 2020, we came together with a group of people because we all believe that angels play an important role in the African ecosystem. We all believe that for a very early stage company, the best investor is probably someone who lives down the street, someone who understands the value you create for your clients, who understands the market you operate in, hence angel investing. So Alex and Steven and myself came together, and we put together the Academy. And then we've been running 11 cohorts since. So all our work has been almost all the work is like cohort based, a class of people that we take through a program. I'm going to say almost 800 angels trained, which I think is absolutely wonderful. And the community is vibrant and active and keeps growing. And then I'm also very proud that we have more than 50% is female participation. And then we've also been involved with a lot of sort of coaching work of angel networks. And then the mantra has been that this is sort of for angels by angels. Both Alex and Steven I run angel networks, Steven in Nairobi or in Kenya, and Alex in Cape Town. And I am not on the continent. I invest myself, but by a little bit of a different way. That I'd love to speak about also if that's of interest. And then we go to the next slide, where it's simply going to be So the two organizations behind the Academy are obviously Meridian, which is the boutique advisory firm that Alexandra operates out of Cape Town, but with a pretty much a Pan-African footprint, if you will. And VBAN and Victoria, which is the organizations that Steven runs out of Nairobi. And then without further ado, we would like to go to, and of course we do training, but we also do a lot of sort of research work. So there is, if you take a moment, if you're interested, I mean, on our website, you would find case studies, reference material, legal guides, a lot of things that we have developed over the years because people came to us and said, listen, we need help here or there. And that has become sort of research knowledge products that are available on our website, all available to everyone who finds that of interest. Right. So without and then of course we are about to start the application process for cohort 12. Following the panel today, we have some more information about what that looks like. But we are always very excited we launch a new cohort because it's always a nice fresh start and exciting about who we're going to get into the cohort, etc. But more information about the cohort following the panel. And on that note, yes, before we start with the panel, of course, I'd like to ask Alex to speak for a moment about the Raise Ready program that she's been working on, and speak a little about what it is and what you're looking for. Thanks.
Thanks, David. So we are very excited to share with you that we have been working very closely with some of the alumni of the Royal Academy of Engineering Africa Prize for Engineering Innovation. It's a really fantastic program which celebrates and supports engineering innovation across Africa. We've worked with 10 of the Africa Prize alumni, taking them through our program Raise Ready. So if you think about the African Angel Academy, Raise Ready is almost the mirror image equivalent for entrepreneurs to really get them to understand the deal-making process and get them ready for early stage investment. We have 2 showcases which we are hosting in collaboration with our lovely friends and partners, African Angel Academy. And those are happening next week, Tuesday and Thursday. We've got a wide variety of startups from across the continent. So please do sign up. You can either scan to register, and I'll put the RSVP link, which is a Google form, in the chat in a moment, and hope to see many of you there. And please feel free to extend to your investor networks as well.
Thank you so much, Alex. I'm always, of course, we're very proud to be associated with the Royal Academy of Engineering and the Africa Prize for Engineering, which Alex, for many years, together with Stephen, have also been helped sort of to organize and put together. So thanks for that. Great. Now, without further ado, we will move to the actual panel of today. There we go. So I'm always very proud of the work that we do with the Academy, of the impact we have. But I think one of our secret powers is our ability to bring together some of the most relevant speakers, some of the most relevant investors on the continent. And today is no exception. I'm very excited. We have Fayel here, who is with the Côte d'Ivoire Business Angel Network, Solomon, the executive director of LAN, the Lagos Angels Network, obviously one of the oldest networks on the continent, together with the Cairo Angels, although the Carthage Angels from Tunis might challenge that. And we have Joe here from Hoke, which is, I guess, a relatively newish community, but very, very excited to have all three of you here. And obviously, we're going to speak about the topic of building thriving angel communities, keeping angel groups active and engaged, which is not always that easy. But let's start the conversation by, let me ask each of you sort of, if you can briefly speak about your journey into angel investing, how it began, and the networks that you're involved with, or that you run, or that you're president of, etc. Fayel, shall we start with you first?
Sure. So hi, David. Hi, Alex. Hello, everybody. Super happy to be here today. So my name is Fayel. I live in Côte d'Ivoire. And I'm the president of the Côte d'Ivoire Business Angel Network, as David mentioned a couple of minutes ago. So my journey in angel investment started over 10 years ago, I believe. I had a friend who started was launching his startup in Nigeria. And he basically reached out to all his friends to ask us if we'd be interested in investing. And at the time, when I think back about this decision, I think it was probably really stupid, because even though he's a good friend and I trusted his ability to develop a successful business, I didn't really know Nigeria in detail that well, or the sector that I was investing in. But I still did it. And that was kind of like the beginning of the story. After that, I started a network of startup hubs. So one in Mali, one in Senegal, and one in Côte d'Ivoire. And that's when I really started working with startups very closely, supporting them, helping them think about product market fit, how to scale, how to grow, and how to ensure they could be like sustainable. And at this time, we were providing a lot of capacity building to our entrepreneurs. But I realized that basically at some point, they do need those small checks to get started, to test hypotheses, to start thinking about growth, et cetera, et cetera. And especially in our network of Francophone African countries, and Côte d'Ivoire more specifically, we didn't have a whole lot of investors that were playing this role. So at that point, I was like, okay, let me just join, let me try to find an angel investment network that exists, and then see if I can add value that way. So I looked into the two that existed at the time, but unfortunately realized they kind of existed more on paper, had never made any deals, had like a nice website, et cetera, et cetera. So with a couple of friends of mine, we decided to launch CBAN. With the intent really of being active, of not just being, a website or a page on LinkedIn, but really making deals, supporting entrepreneurs, being an active leader of the entrepreneurial ecosystem in the country. And that's how that started. That was about 2022. Now we're about close to 40 members. We've done 2 investments. and we're always looking for new members and to try to accelerate the pace of our investment journey. So I'll stop here.
Wonderful. Thank you so much. Thanks. Great introduction. We'll definitely get back to the number of members and how do you keep them excited, etc. The views you made, etc. But thanks for the introduction. Solomon, as the representing the Lagos Angels, well established. I'm not maybe even the largest network. I don't know. Let's talk about that.
Hi, Dave. Good to be here with everyone. Thank you all for coming through. I feel honored to be here, and for me, it's a lot easier because I'm standing on the shoulder of the Tommy Davis of this world, the Dotun Suleimans of this world. So pretty straightforward. But on a personal level, I may have gotten into angel investing from a place of necessity because I started out as a consultant to several businesses, large and small, and I saw the huge disparity in the way things were done at both ends. And for the sake of this conversation, it's good to quickly mention that when we talk angel investing, we're really not just talking about the money being provided. It's the guidance, it's the being there, it's the mentorship, it's the structures, the corporate governance, and so all that came to me naturally because in my earlier years too, I spent the first decade and a half of my working career as a university lecturer teaching the business principles across various subjects, auditing, accounting, business strategy, and all that. It was just easy to ease into guiding startups to achieve stability. And then whilst I taught at the university, I also led a cooperative, a finance cooperative. And so that background generally was easy. When the opportunity to lead the team at the Lagos Angel Network was presented to me, it was a no-brainer. I took it. And over the period of running the network, we've just eased into what I've always done, and that's what it's been. I wrote my first check as an angel, I think sometime in 2017, $5,000.
Okay, very good. Okay, very good. Thanks, thanks a lot. And just so the Lagos Angels, how many members do you have right now?
Now that's a pretty tricky question because can you heard?
We can hear you fine.
Can you hear me clearly?
Yes.
I seem to be losing out.
No, we can hear you
fine. LAN has individual members and has corporate members. And some of those corporate members are angel networks on their own. Organizations like Rising Tide Africa, TVC Labs, because these were angel syndicates that came out of the Lagos Angel Network to become organizations on their own. So LAN today, 60 members, individual members. Then we have about, say, 15 other corporate members who also have their members. And so it's that kind of organization, really.
Right. Thanks a lot. Very good. Okay, Joe, over to you. Hoke is not the only thing you do. You do a number of different things, but let's talk about Hoke for starters. So what is it? When did it come together? How does it work? Just a brief introduction.
Yeah, sure. Good afternoon, good evening, everyone. I'm Joe Kinvey. And for those who don't know, Hoke stands for half of a quarter. That's what it is. Historically, 12.5% used to be reserved for angels, and Hoke is essentially a collective of angels. We started in March 2020, and it was we actually started with the idea back in late 2019 when a guy called Newbie was convincing me to start an angel syndicate. And I thought it was a very bad idea. My background, I'm an accountant. I trained as an accountant. I'm a CPA. The numbers didn't make sense. Yes, we had money, but like it did not make sense to start it. But he convinced me. And the way he convinced me was, hey, even if you lose money, at least you'll learn something. So we launched Hoke just when the COVID was starting. And as a result, we've been online first since then. And yeah, so it was Nubi and I, we wanted to become angels. And the reason why we started Hoke is, I think, same to Fayel. We looked around, there's a ton of syndicates, a ton of angel groups. But our challenge was they all had so many requirements. You have to be this person, you have to be that person. And we're like, we just want to invest. And also realized that it was so expensive. I think we did a deal with another syndicate that was charging 10% of the amount that we're investing. And we're like, that's crazy. And we didn't want to do that. And we just cared about investing. Like it can't be that hard, can it? Well, turns out it was quite hard. But what we did to make Hoke work is before we made any investment, we actually collected all the money. So we're like, hey, trust Nubian Joe, give us your money, we'll put it in the bank account, and then we'll go find deals until we'll agree on something to invest in. The deal that we ended up investing in is a company called Bamboo Nigeria. I think we did another company, and then so we did the first two deals in June 2020. We did 3 more in September 2020. One of those companies called Mono Nigeria. And then by the end of the year, I think end of 2020, we've done about 10 deals. As of today, we've invested in just over 120 deals.
Wow.
So that's like a couple of companies we invested 2 or 3 times. So like unique count is about 102 companies across over 10 African countries. The thing that's very unique about Hoke is we also invest in the diaspora. So that's what the thesis is. We invest across Africa and the diaspora, or people who are building for Africa. So like, it's not just African people. We invested in like Europeans who are building in Africa. We invested in Africans who are building outside of Africa. And the collective is made up of mostly working professionals, founders. 70% of them are in the diaspora, a good chunk also on the continent. And as of now, we have 800 members, about 4 million deployed. We have a small fund. We also set up a real estate collective. And now what I do is I'm building technology for, angel groups, syndicates, and collectives. So.
Right. No, very, very inspirational. Thanks. And I think that people can sort of logically understand what like the Cote d'Ivoire angels look like and maybe the Lagos angels. So if we just kind of zoom in on Hoke a little bit further. So 800 members. So how do people find you? Is it buzz? What's the magic there? I mean, it's amazing, right? And the fact also that people obviously put money into your bank account before anything else. So tell me, what's the dynamic there?
So when we started, we had a Tumblr page, and this is in 2020. We should have done better than that. Like the page essentially, it's a 1-pager that says what we do, and then you can join the wait list or you can join mailing lists.
Right.
We're doing stuff on social, but like it was just Nubi and I. We had full-time jobs, and people kept joining the mailing lists, and we didn't know who they were. So for I think the first 7 deals, all the deals that we did in 2020, all this money went to Nubi's bank account. And I think one day, I think it was like November 2020, we woke up and we had about 100 people join this mailing list. Like, who are these people? What had happened was that's also around the time that Paystack got acquired. Or for context, Nubi and I were working at Stripe, right? And you can see what we do. You can go on our LinkedIn. And Nubi was transitioning to go work for Paystack. And like, I also ended up working for Paystack. But anyway, we started seeing a lot of tech people who were like, oh my God, this company got acquired for 200 million. A lot of angels got paid, and all of a sudden, everybody wanted to be angel investors.
Right.
So we actually had to formalize this very informal setup. And what came out of that was, hey, you had to spend money to do the legal, open a bank account. And that's where the challenges started.
Right.
What we ended up, so long story short, people were finding us, we weren't finding them. And what we started seeing was people were referring to friends. So folks are like, hey, I heard my friend did this, and we want to learn. So that was the process. We had to introduce a membership fee because I paid 5,000 euro out of pocket to pay for these legal costs. And like, how are we gonna make up for it? Like,
Right.
but we did it. We paid for it, and we announced the membership in, I think, like March 2021. And that year, I think we made about 30,000 euro or dollars in membership fees, slightly more. So because we also had full-time jobs and now we have money, we hired a full-time manager of Hoke while we kept our full-time jobs. And yeah, so that's the process. And we became a bit active online. We talked about the companies that we invest in. We share, we do a lot of events, which hopefully we'll talk about. And I think the discovery kept going that way. I think on our mailing list, we have, I think, like 8,000 people. LinkedIn, probably the same. I think Twitter and IG, like 5,000. So like, and by the way, like Hoke is now its own thing. I don't even run it anymore because I'm busy building other things. It's a community by itself. We mostly make money through membership fees. But this year we've made some distribution, meaning that we made carry, and that's now more money in the pot to pay people and to keep the Hoke engine going.
Right. Thank you so much. And I think you touch upon, I think, one of the core discussion points for today, right? Which is that obviously all of us have been around the startup world for a couple of years. There's great momentum when there's positive news, Haystack, or there's a big exit, you name it, etc., right? But then, of course, things can kind of plateau or flatten out. And so that's where, how do you keep people, and people kind of drift away, right? People, there's other opportunities. So how do you, I mean, is there, I mean, how do you go about sort of keeping the interest of people also if there's economic downturn or if deals do not pan out as successful? How do you kind of, how do you work with that? And then Solomon, I don't know, I mean, LUN, of course, in my book, they've been around since 2010-ish. Obviously, you've not been part of the LUN family since then. But I mean, also, like if I look at LUN right now, there's like super momentum. You're super active. There is events. There is knowledge. There is a lot of deals. What happens? How do you do that? How do you keep the momentum?
Thanks, Dave. Yeah, so you're correct about after a while, for a long-lasting angel network like LAN, you would have some form of lethargy and people get tired, especially if they don't find enough exits. So for LAN, she went through the normal description you've just described about how, hey, it's exciting at first, it's all over the place, it's buzzy, and then people keep investing, and they now begin to ask questions. After 5, 6, 7, 8 years, they begin to say, hey, where are the exits now? And it's pretty common around the angel investing community, and I seem to feel like the network breaks. So forgive me. That's why I stopped. It felt like I was by
We
myself.
lost you for a second. We lost you for just for a second. So please, go.
I wonder why it keeps doing that. But hey, I just go on with it. And so LAN has had a change in leadership a couple of times, from the original founders to, because again she's structured as a non-profit. She's a non-profit, and like the guys at Oak, money comes in only via membership fees that people begin to grumble about paying after they pay the first one or the second one. They begin to question, hey, why am I paying this now?
Right.
And okay, I might need to change my source of internet in a bit, maybe when someone else is speaking, but I just
okay.
try to go on.
Yeah, no,
it keeps breaking out. What we've done is to. So what we've done is to try to really get into people's spaces and understand what is value to the angel investor. What is value to the angel investor? What does the angel investor want as an individual and as a collective? The angel investor wants good deals. The angel investor wants communication, a lot of communication, wanting to know what's going on with the portfolio companies, wanting to understand what's going on. Angels also require a lot of participation. And so what we've tried to do is to ensure that beyond coming around and laughing and playing and gisting, there is content, there is a lot of education too, so that angel investing is a lot about learning about running businesses, providing support for these businesses. It's also a lot of learning around mentorship, because angels need to learn to be mentors to the entrepreneurs that they are backing. So we provide value in that regard. So it's a lot of education, communication, a push towards keeping people engaged and active, being on their faces. Myself and the team go into people's worlds, really. I attend children's birthday events. It's a community life for me. I take it to the very basic communal level. So if somebody's birthday is a big deal for me. So because again, human beings are behavioral around their money. They're cultural when it comes to their money. So we do all of that. Beyond just the activity, we're always asking the question, what is value to the angel? Is it friendship? Is it community? Is it profit? And even in the due diligence that we carry out on their behalf, we'll put them through the process. This is what we're doing. On site visits to the portfolio companies, we're live streaming when we're in those businesses, saying this is what this person is doing. So we bring them from wherever they are into those businesses. And like the guys at Oak, a lot of our angels are in the diaspora. In fact, I think I have more angels outside than inside of Lagos. I think maybe just like 20 or 30% of our angels are actually in Lagos. So this is a bit of an overview of what we're doing here.
Right. No, so thanks for that. And Faiyel, I'll appreciate your opinion in a moment, but maybe so 2 comments about the academy. So I think always an interesting fact that I think that the most suitable candidates for the academy is not someone who's never angel invested, but actually someone who's made a first or a second or a third deal, and then realize that, hey, this is actually more complicated than I thought. I'd better get myself educated if I want to do more of this. And I think that you also referred to education, something that Lon spends a lot of time on. I still believe 5 years in with the academy, that's really important because, like Stephen always said, angel investing is a contact sport. You won't know for real what it is till you do it. But it's true that you only realize what patient capital means when your money is stuck in a company and you're not gonna be able to get it out. Like you hear the buzz, but I mean, so taking time to actually go through some of the fundamentals with the academy, I think is still as relevant today as it was 5 years ago. I'll talk about. But yeah, yes. So in your case, in terms of how do you keep momentum with the network? Any magic there? Anything you've learned over the years?
Yeah, I wish there was magic. No, but I think for us in our situation in Côte d'Ivoire, it's probably very different from what Solomon has, for example, in Lagos or even Georgia's generally. The Côte d'Ivoire entrepreneurial ecosystem is actually quite nascent. It's just now that we're starting to attract like VC investments, and that some of our tech startups are kind of making it on the African stage. So when we started, we realized that, not to like overemphasize that education point, but we realized that we really needed to educate our members, because many of them liked the idea of investing in startups. Many of them were still quite risk averse, not really sure how to do it, not really understanding the time horizons and even the instruments that are used or the risks, et cetera, et cetera. So we ended up having to do like quite a bit around this education piece, and that's why we were happy to participate in the academy about 2 years ago, I believe it was. So a number of our members did participate and really kind of get a grasp of like what it takes, like even deciding, because I even felt sometimes that we were speaking to people and they were like, well, you know, I think I may have to drop out for a bit from the group because it's not really aligning with my priorities anymore. And I have this opportunity in real estate, which to me makes more sense than just kind of like investing in random companies that most likely will not make it than make it. So we spent quite a bit of time on that education piece. For us, it was also really important to build a community. So we have a combination of like online and kind of like face-to-face events where we try to meet up and try to like even get to know each other. We're fortunate to have people from like very different sectors. We have investors from like VC funds, private equity funds. We have multinational executives, et cetera, et cetera. So it's quite broad. And so we felt that by connecting the members, they can see value even outside of the angel network for their own business deals or other things they may be pursuing. So that was also very important. We realized that it's really important to be transparent, to build this trust with angel investors. So for example, when a deal is not going well or a founder, we've been in a situation, for example, I believe twice now, where we saw a company pitch and we liked the company, so we started the DD process, and then the company just went quiet, completely disappeared, ghosted us, like in a bad breakup situation. So we're just really honest. We share the setbacks and the challenges that we have. We also let them know that because this is a nascent ecosystem, this will feel a little bit like a growing pains kind of maturing process. And I think they understand and they're patient with us. And I think because the people that we've attracted are people that not only want to invest or get rich, but that also want to collaborate and contribute to the growth and emergence of this entrepreneurial community. This really helps. And we found that even when we have pitch events and some of the startups are not successful, the feedback and the interactions that happen between the angels and the entrepreneurs are extremely valuable, both for the entrepreneurs and the investors. And that does tend to keep our members also engaged.
Right. No, thanks a lot. That makes perfect sense. And so just for everyone in the room, if there's questions or comments, you want to share your own experiences, you're very welcome to drop something in the chat, and we'll make sure we'll do our best to sort of bring that into the conversation. We also had some people actually submit questions up front, and one question was around how do you actually structure deals, etc. And I think that as a quick takeaway in between, so I think that you've already spoken about how things organize within your community networks, and it can be quite different, right? So of course, Joe has a different structure, and Lan then has individual angel investors, and they also have these syndicates that form, and they're part of the network. And then Fael, I think it's also different. So the point here is that there's no one size fits all. Most angel networks have structured themselves in different ways, and often it's also kind of a learning by doing process. So you start in one way and it kind of evolves into something else. So everyone who's on the call thinking about networks, it's really obviously educate yourself what's out there and then figure out what's best for you, but also be aware that these things pivot quite often. Okay, very good. And then obviously, Fael, you also spoke about that it's not just about the money. People also see this as a way maybe to be, as a way for them to be involved with the whole startup community, to have exposure to maybe new technology, friendship, community, etc. So there's different reasons why people are part of the network. I'm just curious, is that the same with you, Joe? Is it do you feel that there's a different dynamic? Is it more about the money with Hope, or is it also about being involved, being connected, being part of the conversation. And because obviously if you work with 800 members, it's different if you have, let's say, 40 members in your network.
Yeah, Hook is Hook has obviously evolved over time. When we started,
Right.
like 17 people to now 800, and the way you run an 800 people community is different from the way you manage 17 people. One thing that we've come to learn with the Hook community is people care about profit or returns first. Like first thing first, right? Will this thing return my capital? And this is what one thing we've learned the hard way. And then the second thing is like, it's things that they have interest in. It's from the country. Like one example that this company called Renatural. She's building robots that will make wigs out of New York. And when you look at the cap table for this deal, it's mostly women, literally. Mm-hmm. It's mostly women who invested in this. And as a man, I just didn't get it. But women got it. They invested in the deal. And that company, she just went live, I think, like yesterday. And that goes to say that, like, but people invested first and foremost because they're like, okay, she has potential, big market, and I had to be educated. They do something. Of course, they do something I don't know. But we've come to accept that people care about like returns. The reason why people pay membership at Hoke is the deals. So we're lucky that we see so many deals, like maybe 2 or 3 a day. And what we now do is, if you pay a membership at Hoke, we're guaranteeing you at least 2 highly curated deals a month. That's it. And that's the proposition. And if you strip away all the parties and all the events and everything that we do, and we throw great parties, by the way, it's the deals, and that's what people come for. And like we've taken a lot of feedback. We haven't done one this year, but quite regularly we'll send like feedback forms out, like, what do you care about? What do you want to invest in? One of the ones that we got earlier this year is people want to invest in something new. I'm like, that doesn't mean anything, you know. And we came across a deal in Nairobi. It's a sports team that we ended up not doing the deal, but people were like, what's happening? I want to invest in something different, you know, because we brought all the fintechs and we brought all the e-commerces, and we've seen a lot of health techs. So like we're listening to the community every now and then, like quite regularly, to take feedback and make sure that we give them what they want. We've done one edtech deal, but it's not the only edtech that we brought to the collective. We brought so many edtech deals. We've come to learn that Hope people don't like edtech. So we don't bring edtech deals anymore. And we want to list, because if folks are not investing, Hope will die. I mean, it won't die because we have so many portfolios to maintain, but you need to keep listening to folks and make sure that you get what they want. And sometimes I see a great deal and crickets, but I'm not the community. I have to listen to what folks want, and we have to bring them those deals. And it makes it exciting and it makes it challenging, but like it makes the collective stay around. One thing I wanted to add is, while I say 800 people, like folks come and go. Like I speak to people who, I haven't spoken to in 2 years. That's because they moved abroad, they had kids, they moved house, and life is happening. And at the same time, you have new people joining the collective. So like you have this kind of rolling effect. Folks are coming back. But the thing is, once you invest with Hope once, you're a member for life, or you're a member until that company exits or dies. So that's the beauty of what we do, where people stay around. They log in the dashboard every now and again to see what's happening with their portfolio. Is he alive? Is he dead? And we communicate quite a lot. And we actually have a team in place who does that. And if you are a Hope member and I have not given you bad news, I don't know, because I've delivered a lot more bad news than good news. And that's the nature of what we all do, running syndicates and running collectives.
Right. And of course, I think it's interesting that, let's say, 10 years ago, the technology was not in place yet to manage, you know, larger group investments. And you're going to say that it's only still halfway there, because you're building much better, smarter tools also to allow investors to come together. But of course, the fact that you're able to facilitate deals with larger groups, people all over the world, would only be possible because because there's technology to help you with that. Which was not like in the early LUN days. It was like, you know, paper clips and pieces of tape, until just a lot of enthusiasm and before there were safes, a lot of headache, etc. Right? So I mean, we've come a long way. So just, I mean, if I can ask you, if you look at sort of the angel investing landscape across Africa, then what else? What would you like to see more? What else needs to happen? Because I think we all agree that there's still many more promising founders who deserve the opportunity to start and grow a company, but for different reasons, one being capital, it's never going to happen. So what magic needs to happen? What does the future look like? What would you like the future to look like? I know who wants to go first.
I don't think we're collaborating enough. I don't think we're collaborating at all. Right. When you like, one thing that we see is companies come to Hope and they're like, hey, my minimum check is $25,000, right? And they say that to all the syndicates that they pitch into. They go to Cote d'Ivoire, they go to LAN, and Hope has 20K. LAN has 23K. Cote d'Ivoire has 19K. Collectively, that's quite a lot of money, which is, of course, beyond 25,000. But like, this is the first time I'm talking to Fael. We've never met Solomon. And like, we're not talking to each other. We're not collaborating. The three of us can come together, invest in that deal. It means that more angels have access. That company raises the money. It's a win-win for both parties. I want to see more collaboration, and like, that's one of the tools that we're building as part of our technology. How can you invite folks from other syndicates to join an existing deal? There are some platforms that are doing it, but they're not Africa or diaspora focused. And it's something that we want to see more of. Like, I want to tag along Solomon's deal because they've already done the hard work.
Right.
I want to tag along Fael's deal. Like, because
you'd like to see something borderless.
Yeah, that's
right. Yeah. Very good. Okay. Fael, Solomon?
Yeah, maybe just quickly. So I was going to say the same thing as Joe. I completely agree. I don't think we do enough kind of joint investments and kind of collaborate enough. The other thing, when I look at angel investing in Africa and just the ecosystem in Africa generally, I believe it's still kind of majorly concentrated in a couple of markets. So you hear about Nigeria, you hear about Egypt, you hear about Kenya, you hear about South Africa. But I feel like there's like the 50 or so remaining African countries are pretty much like non-existent. So I'd love to see dynamic angel networks in every market, no matter what the size, no matter what the level of maturity of the entrepreneurial ecosystem. And I think we could adapt and do deals. We could do smaller deals. I know at CBAN, one of the things, and it's probably controversial, but one of the decisions we made is to not only invest in tech startups, but also invest in regular SMEs. And basically what I'd like to see is just much, much more activity in every African country, no matter what, because the same way that Eban mentions it, I really believe that angel investing is like a tool for economic development. And I think we could do much more by having it much more democratized, much more readily available, widely available across the board, no matter whether you speak French or Portuguese or English, or whether you're a big market or small market. So that's really what I'd like to see.
Thank you. Very clear.
Great. I'll just extend the thoughts of Joe and Fael and say, we need to bring more people into the angel investing bracket. Not everybody understands the tech play, but a lot of people are interested in supporting entrepreneurs. So recently at LAN, we began a campaign to reach out to really the folks who would not think about this, pilots, doctors, just go into their world like it's an evangelism of some sort and say, hey, angel investing can be added to your regular personal finance portfolio. This is how it works. And we've consciously tried to expand the bracket of angels, really, so that it's not people who work in tech and around tech alone who can be angels. The woman in the regular market is probably angel investing without even understanding that that's what she's doing. And so what the network does is to provide the education and the structure for a wider economic market.
Right. Very good. We have a couple of questions. So one question is about something that ties into this. No, something that's about something that you did not mention, which is it's about exits, where and obviously it's often spoken about, but I mean, I personally think that for this thing to work, we also need to be able to bring back money faster, because I'm also experiencing that, you know, I mean, I've learned that sort of getting the money, putting the money in is the easy part of investing. Getting the money out again is the hard part. And, you know, we've gone better and smarter and more sophisticated in getting the money in terms of how we think about, you know, deal flow and pipeline and portfolio, and we have save agreements, and there's mechanisms that it become easier and easier to put money in. The getting the money out part is still not functioning, if you will, and that hurts me as an angel because I can only spend my money once, and if it would return faster, I can do more deals, and also, you know, we need successes on the board for people to keep excited about it. So there was a question in the group chat about if you can speak a little bit about maybe successes you've had. Joe, you mentioned that you've returned some money, but so how, you know, any lessons there? What has worked, and maybe what would you hope to see more of that in the future?
David, do I have permission to I'll share something for less than a minute? I was gonna share my screen real quickly. Is that okay?
Go for it. Go for it. Now I'm excited.
Thank you. So this is a table that we put together in our annual reports at the end of 2024. And this is like a breakdown of 8 companies, the exits that we've had. I don't know if people can see it. I'm just zooming out.
Yeah,
and
thanks.
So the first 5 companies returned less money than we put in.
Right.
The last 3, one returned 8 times. The other one returned 5.1. And the last one just returned the money that we put in.
Right.
So what we pitch to people is, yes, you want to angel invest. You will never beat the market. You have to diversify. You have to, if you have a thesis, you have to invest a couple of times to hopefully get a return like this. Because if you're picking, you don't know where your dart is going to fall. And startups are so unpredictable. I couldn't tell you which one of these companies would have returned this type of return. So this is what we shared with our whole community at the end of the year. This is what it looks like. It's 8 companies. Of course, we've done a lot more than that. But yeah, this is just a high-level exit document that I wanted to share.
Right. And we're already running out of time. But so just one maybe just follow-up question there. So is there anything that you would like to see happen or that needs to happen to unlock more exits? Is it technology? Is it secondaries? Is there more buyers? Can you point to one thing?
So technologies will enable secondaries, because I was in Dubai earlier in the year, and I was talking to this guy who invested in this company in Nigeria like 10 years ago. He was literally crying about exits. I know people who want to invest in that company, but like the technology doesn't exist. And secondaries alone, there's not enough technology in the world. Now, for our part of the world, there's nothing. So like there's always buyers and sellers, and some people want to come in at different times, and you need to have the technology to enable secondaries. Secondaries will help. But like I want to see startups pay dividends. Like I've invested in companies that are making crazy revenue, but like we're all just hanging around waiting for this exit. Can I get some money? At least give me my money back. So I think engineer more M&A in the ecosystem, but like let's get around and try to like be a little bit traditional, pay dividends or do something else, because
fair enough.
Capital. I know
Solomon.
Yeah, so what we have begun to do is to have a hybrid structure for businesses that you know, so like Fael, we go beyond just the regular tech startups and do some regular SME plays. Now, if you're an SME and you're already making sales, we created a revenue-based financing structure such that part of the money that goes in there is equity, but a part of it also is debt. And for every time you sell any item, we get a piece of it. And it's a founder-friendly structure, but the angels love it because they get distributions. And because when I started this conversation, I said, we're focused on what is value for the angel investor. If exits and getting money back is value for the angel investor, we've got to be creative as to find ways to make sure that they get money back. In fact, my angels will say, hey, why do I need to wait 5 years, 6 years before any money gets back to me? So hybrid structures like this one that we've used for a number of the startups that we're at really, really help. So it's long term, but structure also plays a part in the way exits work.
Right. No, thanks for that contribution. It's very, very good. Fael, I guess you had the honor to make like a final moment before I need to sort of close the session. So any thoughts either on exits, or it could be anything else, right? But
yeah, so just quickly on exits, if I take our experience, I think we've been quite slow in making deals. So as I said, we exist since 2022 and we made 2 deals to date. So I think for us, we need to just accelerate the pace of deals. If you look at the ratio that Joe was sharing, you need some will fail. So you need to make sure that you invest at a much faster pace. So that's what I would like us to do. And since I have the honor of closing, I would just like to say that I think it's also important to think about angel investing and adopt kind of a gender lens to it. And this is what we've done at CBAN. So at any moment, we really try to make sure that we have at least 50% of our members that are women, or at least 50% of our portfolio that is companies launched by women. And so far, we feel like this has been effective, and this is a good way to kind of address this this kind of imbalance that we see in the ecosystem. So that's what I'd like to close on.
Okay, thank you so much. So to everyone, I had promised you more information about cohort 12 following this session. We'll do it a little bit different. We'll send that via email, so you'll get more information about that. And please make sure to share that with your friends or people in your network if you think it's of interest. We're out of time, which is horrible, because I think we could continue this conversation for much longer. A big thank you on behalf of everyone to you, Fael, Solomon, and Joe.